Welcome to today's deep dive. We're going to take a close look at the financial markets for July 1st, 2025.
That's right.
Our main source today is the Lotusbee Wealth Substack financial market recap for that day. And our goal really is just to pull out the most important bits of info from all the market action.
Get to the core of it.
Exactly. And today was, well, it was a fascinating day. Definitely a mixed picture out there. You probably saw the headlines. Dow Jones finishing up. But the NASDAQ, yeah, took quite a breather. So let's unpack that a bit.
Absolutely. And I think the key theme, if you look broadly, was consolidation in the equity market.
Consolidation, okay.
Yeah, you saw the blue chip indices like the Dow, they kind of steadied themselves, actually led the games in some cases, but then small caps, they actually popped. While tech, as you said, took a step back. The S&P 500, for instance, barely moved, down just 0.06%.
Wow, so flat overall for the S&P.
Pretty much. Suggests a day of, absorption, rebalancing, maybe.
That idea of calm consolidation. It almost feels strange when you see the specifics, though, like the Dow closing up, 0.95%? Solid gain.
Yeah, led by industrials, value stocks, classic Dow names.
But then the NASDAQ 100, which is so tech-heavy, ends down 0.85%. That's quite a split.
It really is.
So when you see these big industrial companies, leisure stocks even, leading things while tech lags, what's that telling us about how investors felt that day? Is it defensive or maybe renewed confidence in those older sectors?
Well, that divergence is really the story, isn't it? It strongly suggests investors might be rotating capital.
Rotating, okay.
Yeah, moving money around. Look at the Russell 2000, the small cap index. It finished up even stronger, 1.02%. Small companies really did regain some momentum.
Interesting. And the VIX, the fear gauge,
edged up just a tiny bit to 13.38, but honestly, that's still very low. Anything under 20 usually signals more complacency than outright fear.
So not panic, just reshuffling the deck.
Exactly. It looks more like a market rebalancing its portfolio between different sectors rather than a market that's, truly on edge.
Okay, so let's dig into those sectors. Beyond the big indices, the individual stocks must tell a story too. Where did the money flow?
Right. On the winning side in the S&P 500, you saw some big jumps from places like Las Vegas Sands, up almost 9%.
Wow, 8.9%.
And Wynn Resorts, up 8.85%. So clearly a boost for tourism, leisure stocks.
Makes sense.
And Packaging Corp also had a strong day, up 7.6%. That fits with that industrial sector strength we mentioned.
Yeah, it definitely points towards what some people call old economy or value stocks getting the attention.
Which naturally raises the question, where did that money come from?
Good point. The losers.
Yeah. On the flip side, you saw some notable drops, mostly in tech and health tech.
Yeah.
AMD down about 4%.
Okay, semiconductor sell-off. Profit-taking, maybe?
Seems like it. Profit-taking after some good runs.
Yeah.
Palantir was also down over 4%, so a bit of a retreat in data analytics. And Dexcom, health tech, saw a 4.25% pullback.
So it's a pretty clear rotation story then. Money moving from growth, like tech, into value, like industrials or leisure.
That's the classic narrative for a day like this. And even looking at the most actively traded stocks by volume, names like Nvidia, Amazon, they still saw tons of trader interest, even though their sectors were generally weak. Shows people are still watching them closely.
Interesting. And it wasn't just stocks doing different things, right? The crypto world had its own shifts.
Definitely. Bitcoin was down about 1.5%, hovering around $105,850. Seems like profit-taking there, too, after some gains in late June. But it held above key support levels.
Okay, so a pullback, but not a collapse.
Right. Ethereum retreated a bit more, 3.6%, near $2,410. Looked like it was pulling back from a resistance level, a price where selling often picks up.
And Solana, I heard that one underperformed.
It really did. Dropped about 6.5% to around $146.
Ouch. Why the bigger drop there compared to Bitcoin or Ethereum?
Well, Solana's much larger drop probably suggests more intense profit-taking in some of the more speculative altcoins. Maybe a bit of a flight to quality even within the crypto space.
So investors getting a bit more selective even in crypto.
Seems that way. But then you look at precious metals and they told a different story, a more traditional one. Gold closed up almost 0.9%.
Benefiting from safe haven flows?
Classic safe haven buying. Investors looking for less risky assets when things feel a bit uncertain. Silver, though, lagged a little, down slightly.
So even within commodities, some differences.
Exactly. It just highlights how capital is constantly moving, seeking different opportunities and safe spots across all kinds of assets, not just within the stock market.
So wrapping this up then, what does this all mean for you, the listener? To recap, the market on July 1st showed clear signs of consolidation. We saw that notable shift, right? High-growth tech took a breather. Small caps popped up. Value stocks in areas like industrials and leisure gained ground.
And gold held its appeal.
Yeah, gold maintained that classic safe haven status, even while some cryptos pulled back, especially the more speculative ones like Solana seeing bigger drops.
And I think what's truly fascinating looking back at that day is how all these distinct performances, the Dow's industrials doing one thing, Nasdaq's tech doing another, small caps surging, crypto having its own nuances, gold acting as a safe haven.
All happening at once.
Right, all on a single day. It just reveals the really complex interwoven dynamics that are always driving the global financial landscape. It really underscores why you need to look at the entire mosaic, not just focus on one single piece to understand what's really going on.
That's a great way to put it, the full mosaic. Understanding all those diverse movements is definitely key. Well, thank you for joining us on this deep dive today.
My pleasure.
And we absolutely encourage you to keep watching, keep trying to understand these fascinating market dynamics for yourself